Hey, folks, welcome to InTheMoneyStocks.com's live trading videos where we discuss the technical and proprietary reasons for taking specific trades. Today's date, Thursday, August 8th, 2013, and let's get right into the charts today. Well, folks, the markets again put a top in this morning on a gap up, reversed to the downside, went briefly negative, and now during lunchtime volume, you're floating back up a little bit. Now, again, just to summarize before we get into trades, the big key to today will be where we close. If we close flat to negative, that is very bearish going forward. If this market can keep a gain and push higher towards the highs of the day, that is positive. Depending on which angle it goes to, that will determine the next multiple trading days action. So in other words, if we go back to the highs of the day today, I think they float this market up Friday and into early next week. If we close flat to negative, we could see downside very early as tomorrow and early next week. All right, folks, let's get into the trading side of things. So look at the market today. Now, how did you know that the market could reverse off this pivot top? And in actuality, you had a nice topping tail. But even before the topping tail, let's say right at the open, the market was pushing up. And in the intraday stock chat, I talked to my members and I said, guys, for those of you that are higher risk traders, you can short the S&P 500 right here. Many did. Many made a lot of money as the market pulled back today. Well, the answer is very simple. First of all, you had the 200 moving average right here. All right, so right off the bat, you know you have one factor, right? One factor of significant resistance. Another factor was this pivot high from yesterday as well at the 170 level. All right, now again, the interesting factor is there's more. There's more to this story. That's not just it. And the answer is simple here. At the highs of the day right here, along with the 200, there was a Fibonacci 618 retrace. So now you're talking about three signals. Granted, it's the first candle of the day, which is always a little bit more high risk on this 10-minute chart of the SPY, which mirrors the S&P 500. But again, just think about it logically, folks. You had a 618 retrace, a 200 moving average first hit, and a pivot top from yesterday afternoon. All three factors telling you the market could reverse. That's a high percentage trade. Sure enough, the markets start to decline here. And look at the fall we got. Now, as we were declining, you got a topping tail as well. So that was even an added bonus. We didn't even talk about that as one of the three catalysts. But once you saw that, then, well, that's just a bonus. And it's just basically an initiation or an addition to the positive side to this short trade on the SPY. Markets fall down here. Now, the key is to look for where to go long here. Now, as the market came down, here, folks, what you see here is the pierce of the 20 MA and this pivot high right here. This was a scalp we took in the intraday stock chat as well, and I took a little bit of a profit off of this one. Notice the green candle. Now, how did we know that that was going to be a bounce play? Well, you have multiple down candles. You come into the blue trend line, you pierce it, which is the high right here, and then you have the 20 MA. So on a pierce of the 20 MA, your long play was initiated and you got a bounce. So again, think about the factors here. You have this high pivot from yesterday. You have the blue trend line, which is a major pivot going to multiple days ago low and the high from yesterday, right there, which was also hit at the end of the day there. And all of these factors with the 20 MA give you a high percentage chance of a bounce. And sure enough, you get a quick bounce, you take your profits, and then as soon as you take the profits, the markets start to decline. The way I played this, folks, I took half off the table for 10-cent bounce, and then what we saw is the SPY reversing. I kept a break-even stop on the second half, which is good money management, and I moved out on that second half for break-even. So I made a nice chunk of change on the first half, and then on the second half, I moved out. I basically played 5,000 shares there, took 2,500 off the table for 10 cents, $250. Second half, I was stopped out, break even. Okay, and that's what day trading and scalping is all about. Money management. Money management, unbelievably important. Now, as the market came down here again, there was another great level. First of all, you have gap fill right here. So you know you're coming down to gap fill. Because you consolidated right here, the proprietary PPT methodology says don't buy the gap fill immediately. Let it pierce, let it find the next level below. The next level below is the 50 MA and this trend line right here, which is the consolidation before we broke up into the close yesterday. That was your key level. So again, gap fill, no. 50 MA, okay, you're getting warm. Now you're looking for a pierce of the 50 right to this level. This is your trend line to buy. You pierce it, you bounce back up. As long as we're in this trade, you form a bottoming tail. What does a bottoming tail tell us? Upside is likely. What does the time of day tell us? Well, it's 10:30 time frame plus now. That's lunchtime. That's early lunchtime. Volume gets very light. The market is going to head higher. All right, do you see how easy it is? Literally topping tail and multiple factors up here, bottoming tail, multiple factors here. Just play it. All right, and sure enough, the markets float back up beautifully. And again, bottoming tail, pivot low, pierce of gap fill, pierce of the 50 MA. So many levels there, multiple factor trade. Remember, those people that play one factor trades generally will lose or they'll break even. What you want is a multi-factor trade. You want price pattern time factors or multiples of those. When you get that, it is a high percentage trade, and you can make a lot of money on this. Now, later in the day, let's see what type of trades we might be interested in. Well, right now the market's in float mode, so you don't really want to short after 10:30, 11 o'clock. So that means it's out the window. You want to let this market float up. Now, you might say, well, is this a good line? I would say no. Is this a good line? No. What about the 200 again and double top? Now, that's the one level today that I could be interested in. And I'll have to make that determination later by how it comes into that level. If it consolidates below, you don't want it. If it goes straight up into it, you probably do get a pullback on it. Now, if we make a bull flag, let's say we start to consolidate above the 20 MA and make a bull flag with a time count, then absolutely you're going to look for a long there. You'd rather buy the market in light volume than short it. All right, I hope that makes sense to people, guys. This is what it's all about. This is my educational portion, showing how the trades come to me. How do I figure out what trades to take and so forth? And this is what this video showcases. So again, folks, I encourage you to come take the 7-day free trial here at inthemoneystocks.com. Join us, 7-day free trial to the Research Center for swing traders and day traders. Day traders are more geared towards the intraday stock chat. Swing traders, investors for the Research Center. 7-day free trial for both. You can take one or both together. Come join us and profit for life.